The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. The Dow's down 20 at 20,904. S&P is up 1.28 at 2369. This is the E-mini we're looking at right now. It's made a PG, made a left side, right side price time match right there. And it's pulling back from the high of 2373 round number. And we'll see a break above that, which suggests that, yes, there's some further running to go today, just a bounce after having quite a sharp pullback from the March 1st high. Let's just get to the numbers here. Oh, and on the downside, if the E-mini takes out 2361 support, that's not going to be very good. All right, so let's look at this, and we're going to go to the Dow INDU. The Dow is down 17 at 20,907. You see that black line there in this left side chart? Left side is always the daily, middle is the weekly, on the right is the monthly. What we're looking at is that 9-period moving average has now made a lower below 20,901. Yep. So we've made a series so far of lower highs and lower lows since the top at 21,169 on the 1st of March. What's really interesting is the following day, after the gap up, there was an inside bar. Inside bar means a lower high and a higher low. Then it was followed by 1, 2, 3 tiny little candles, the smallest candles we've had in quite a while, with lower lows and lower highs. Ha-ha. Today we made a lower low and we've made a lower high, but we're not even 2 hours, an hour and a half into the day, so we really can't talk about it as if it's closed. But this is really important. You see that spike there? I don't talk about volume. I talk about on-balance volume quite a bit, but I never talk about volume unless there are certain criteria that are met, criteria that I've, over the years, I've found have been extremely important. The first is that if there is a high bar, if there is a high volume bar on a gap down low that could be a cyclical low, or let's call it a sell mode that has a chance to turn around in that price movement, that means that if there is a low of significance, there's a real good chance you could rally for about 28 bars, and then there's a whole set of criteria to say how much further you can go if it's holding above that low. But on the upside, when there's a candle like this, right there, a gap up, huge gap up candle on news, that was the speech on the 1st, on the 28th, and that was the response. That suggests to me that almost the inversion, that you could have 28 sessions, something like that, 18, maybe 28 sessions to the downside before you can even think about breaking to the upside. So I'm just keeping that in mind. The one on the upside, I've done work on over the years. I don't have an actual rule as I do on the bottom. So this is the way I'm thinking, that was a climactic, a volume and price climactic move to the upside. Now we've got to get rid of all that excessiveness. You've got to break the low of 20,841. That was the high of the 28th. You've got to break that, and then you can start forming a base. The S&P has already filled the gap. So let's keep that in mind. Now let's go. And the weekly chart for me, and this is a real nice move today and tomorrow, I think we're going to make a peak D in the weekly charts, in all the charts, in fact. So here we go, S&P, SPX.X, peak D. I've already put the down arrow because that is confirmed for me already yesterday, breaking under the 9-period moving average, and the MACD crossing negative and the stochastic breaking under 80%, now at 65%, that yes, there is some kind of a move that's going on. And that's a down move that suggests that time, so far maybe not so much price, but time is involved. Weekly chart, I think this is going to turn into a D. Look, the stochastic's already at 95%. That's really strong, but it is turning down. The RSI, the relative strength index, is turning down. So is the on-balance volume. Week is not even halfway through, so I'm anticipating. Let's go to the QQQ series. The QQQ series right now, nice move. And that's the reason why I've been talking about a rotational correction that we might find out that because so many fund managers are underinvested, so many people are underinvested, that in fact there is support on every pullback. That's really what that means. And right now the QQQ series, the Power Shares QQQ Trust, is the NDX 100 index, is having a nice rally. It's at 131.08. 131.69 actually breaks out and starts another move. I'm going to have to call that G/C. Wouldn't that be interesting? So in the meantime, back at the ranch, as we say, the 9-period moving average of 130.50 is going to be real important support. If by Friday it starts to break down and goes into the 129.70s, then I think we've got ourselves lower highs and lower lows in the QQQ series. Part of that is also that the SMHs have had a really big move to the upside over the last 3 days, not so much in price, but in candles. Nice big green candles. I shouldn't say nice because we actually are short just a tad below this, but we've got to stop just a penny above the highs. It's really a very tight stop. Our other trade of the inversion of this, the short side, hasn't worked out, but we can always get back in. Here's what I'm looking at. In the IWM, the IWM has just been showing a lot of weakness, relative weakness as well as internal weakness because of the MACD and stochastic. Relative because to the Dow and the S&P is much weaker. But this is only a leg C in the weekly chart, and that says to me, okay, chop, and we can go down from 136.81 right now down to the 135, 134.30 area, and then we'll have to see, is there going to be a turnaround to the upside in the general market? Let's go to gold. Gold is down 8.5. One of the things I'm looking at here in gold is this is like a straight line movement. Sometimes it can be really positive. It's a powerful thing if it takes only 2 legs down, even though they're sharp, if some kind of a base is formed. But I'm a little concerned because the weekly chart has just dipped a little more than I would like to see. MACD is okay. Stochastic still at 79%, not bad. But my thinking is that the gold, this is the candle, there's no trough. There's no V-shaped bottom yet until you can get to 1182. So I'm thinking that there's a little more to go. I suspect within a day or two we could get a bounce, and then the test comes of strength. So that's the gold and the upside. Any break into the 1220s at this point, and if that holds, must be considered a positive to stop the decline. Now let's go to the silver. Silver right now is at 17.31, down 22 cents. It's in leg B as well. It's under the 200-period moving average. There is support. It took it out today on the left side. Next support is around about 16.76. Let's look at crude oil. Crude oil had a bounce, and now it's giving it back. It's down 86 cents. It's at 52.29. This is going to be important. If crude oil takes, this is also a market situation. If crude oil takes out the low of the 8th of February, goes below 51.61, I would say that's the first real sign that crude oil in the monthly chart is confirming the lowercase h pattern that goes to a lowercase m pattern, and that's really not very good. The only thing missing I didn't get to is high-grade copper in this segment, and when we get back, I'd like to talk a little bit more about bonds. I want to show some very interesting charts. Copper is down, and so I'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I just wanted to show this. I was on with Tommy a little earlier. There was the crude oil inventories came out. But before that, I have a bit of a delay, and I was talking to him, and I said, this arch formation in the 2-minute chart suggests that there could be a turnaround, and I would not be surprised if there's a spike. And I think the spike would be towards let's say this trend line here, the 5250s. In fact, what it did is it spiked all the way to leg D. Now, what does D mean? In the Chapman Wave methodology, we're always looking for a low bar of a consequence that we can start considering to be the start of a move to the upside. And then each successively higher peak is labeled alphabetically with uppercase on the upside, lowercase on the downside, alphabetically through G. But D is where the fourth highest peak is, where other things can happen. Fourth peak, what does it do? Fourth peak right there. Plop, it comes down really sharply. So I just wanted to mention that in the context of what we're looking at here. I wanted to go to, I was showing high-grade copper. High-grade copper has pulled back very sharply. That was an unusual peak, not unusual, it was a peak F. That was the the sixth highest peak in the Chapman Wave, made an arch formation and still breaking down. And that's the same alternate count I'm going to use in the weekly chart. So copper coming down says, hey, be a little careful here. You know, sometimes the Fed, when it finally decides to raise rates, it's right at a point where the market is just a little bit soft, maybe for a few weeks or maybe even a month or two. So I'm going to be watching this real closely. Here's the other thing. When I'm looking at the TLT, which is the Lehman 20-year T-bond ETF, it's the iShares, look how it broke down. It's at 117.30 down, 1.12. You see the arch formation, how consistent these patterns repeat over and over again? It can become bullish, like in the monthly TLT, when it made that arch, made a higher right side low, and then started moving higher within the uptrend. This is, to me, this could be the first time that the TLT and bonds in general are going to break their 31-year-old up channel support levels in the monthly chart. And that will happen if the TLT goes to the 115s over the next few weeks. What's really important about this is that within the context of looking at patterns, this H didn't have a very big bounce. When you look from the 140 area, 142, or it was actually more, 145, down to 116.80, and then just a tiny, nice percentage, but a lousy percentage if you're looking at the big move, But from bottom, if you got it, you had a nice percentage bounce to the week of the 13th of January, 123.14. But now you're back again. That's not a good sign. And if I put it together right here with my chart formations that I look at based on the weekly yields, this is the 30-year TL, the old TYX, white, brownish gold is the TNX 10-year T-note, and this is the 5-year. And they're very close. They're within cents of breaking to the upside. Now, every other one has gone close and not broken to the upside, every arch formation up until now. So this is going to be a really big change of scenario. I might have to change that arrow there, or at least maybe even start a brand new arrow saying this is new leg B in the weekly chart. That changes the whole thesis that I've had for decades of the U.S. Japanizing our bond yields. In other words, taking them down to zero. Now look at this. This is the week. This is Wood WOOD. This is the weekly iShares Global Timber and Forestry ETF. I'm still calling this an F, and that says if there's a sharp pullback from 56.48 without taking out the high of 57.65, and we break down, and if the HGX, the Philadelphia Housing Sector Index, starts to pull back, we're getting confirmation about the transportation average, the different sectors. All we're waiting for is the SMHs to break down the semiconductor index, and there could have been news today that pushed it higher. So this is a period just to be somewhat cautious. You don't have to even go short. Take a little money off, get ready to deploy it maybe in a few weeks' time, who knows. But in the meantime, I just think it's time to be a little bit cautious. So that's what I want you to look at in the bigger picture. The VIX index, when it does move, it moves very sharply. And right now it's down 21 cents. If it takes out the low, closes below, sharply closes below the low of 10.94 of the 3rd of March, that's a real problem. So now let's get to some questions. In fact, today's a little quiet because I've been so thorough in all my analysis here. Let's just do this. I've got a question about AAL, American Airlines Group. What about it? Well, this has gone to an A, B, C, D in the daily. Let me show you. Identify the lowest low bar. Merely count. I always have to go left side to see that there isn't, that you're picking the low bar, and that's the one right there. Now you're going to go A, B, C, and fractionally higher for a D right there. Question, well, how do I know so quickly that there was a D? Well, I've just done this for so long, I can usually identify a penny difference. Look, 48.05, I think it's 48.09 or something, 48.13. There on the first, and that now it's making an arch formation. Remember, I'm all about patterns that repeat over and over. It's like a fractal, and it can be, doesn't matter what time frame, 1 minute chart, could be a yearly chart. The fractals never change. So when I'm looking at this, I'm saying, okay, now a good question by someone who really knows the Chapman Wave methodology very well is that a potential for a falling axe formation? And the answer is absolutely, it is. But it's only a potential if there's a break above that dashed trend line. Usually it's 2 bars that you need, and they have to hold and make this support. What would the price be at American Airlines, trading at 44.76, down 8 cents right now? It would have to be a weekly close above, I'd say 49.50, not even the trend line. I want to go a little higher than that. All right, so that's 5 points away, 4.5 points away. But what's the pattern you're looking at right now in the immediate term is the H pattern. So that's the clue. If there's an H pattern and it does break down and it closes, American Airlines closes below 43.57, not good news at all. So in the meantime, and the weekly chart, monthly chart has the same pattern, much more extended, goes all the way back in this case to the high it was made in 2015. So there's your trend line, and it's pretty much the same numbers. Above 49.50, that's a big positive. Is it acting well? Yeah, so far it's acting well considering the huge move that it's had from the 25s to the 50. It's doubled. You can expect a pullback. It's just a natural thing. All right. So now we're going to go to KC. Let's see, KC, question right here. Oh, not a question, it's just a statement. Exact double bottom from 3-1 long range bar, takeoff 142 last. Let me see what we've got here. I've got a peak. Okay, let's just do this quickly. We've got, this is coffee, I believe, continuous contract coffee. This is leg A right there. Oops, right, A, B, C, and it fails. But it hasn't broken down. And that says this whole area of 140 to I don't even talk 139. The whole area of 140 is absolutely imperative to hold. So if we can do that with the stochastic turning up in the MACD, that's going to be good. But it has to close above 144 in the next 2 days to really show me that it's got strength. Just wanted to follow up on what I was looking at. KC Coffee, but short term looking quite good. All right, Basil Chapman, Tiger Technicians Hour. Dow's coming back a little bit down, -2. S&P's up 2.73. Here's the chart. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So a couple of things. If you look at yesterday, the 7th, you see this A, remember the capital, this uppercase A, the Eiffel Tower pattern, I said, got to watch closely. And remember, there was a trend line that I said, this is the same thing that we'd be looking at, even if it was the VIX index. See these lows that were formed, and then eventually it broke down, It went to an A, B minus, and then another A, B minus, and then broke down. This is the E-mini 10-minute chart. And it plunges all the way down to about 8, or it was 8 o'clock last night. It goes down to 2359.50. And now each one of these peaks gets counted. So it goes peak A, peak B. It pulls back, but it has an inside peak A, peak B, and even a C. So that negates the B, because I always want to be as conservative as possible, looking for the nearest wave count. That the last wave count is the count that you want to get right, because it's going to help you. And then it goes D. And look, there's no peak, no peak, no peak, until it makes an E and a double top at that E at 2367.50 at 5:20 this morning. When I looked at the market, it was right in the throes, right there. This is the bar that when I went into the office this morning. Bam! Starts going down. I said, "Oh man, I missed a nice little short." And then I said, "You know what? Just wait." And then what happened is it made that A to B equals C to D, except that D was very sharp. It pulls back into trough A. Remember, we're talking about troughs on the way down. So this is the first trough on the way down, A, and then it goes to B. And what I was talking when I was with Tommy is I said, sometimes a very sharp single leg A to the downside with a tiny little rally and then another sharp move can just wash out all the shorts, and you can actually get a bit of a rally. Well, we did. We went A, B, C. Now, here's the question. Is this a C or is it a G/C? Normally, I want to do the work together with the MACD and the stochastic, but what I did is I put a G/C. But this was my target, the left side, right side price time match, and we went there. You see the green, it's called the Chapman Wave inside wedge target repellent line, and it went right to that exact area and then broke above it. So it said to me, if along, you've got to just get out, even if it goes a little higher. Now what we've got is a lot of resistance. I'll take a little moment afterwards, not now, and we'll do it together with the stochastic, because I bet this rally was not confirmed with the MACD and stochastic. When you do this enough times, you get it in your mind. Not only that, we achieved almost everything that you wanted on the upside. And that says this is a very important, it's probably a G, and it's some kind of, at least talking 10 minutes, right? Some kind of a short to intermediate term top. Now I had a question about CCJ, which is Cameco Core, and I can't remember, they're in one of the commodities. I can't remember if it's copper or something like that. Cameco Core trading at 11.23, up 22 cents. Question is this the start of another move? Well, look what happened. Cameco, I'm not sure how to pronounce it, made a move right here to F and then a G. Now, it could be a peak C1, C2, but I'm just going to, for argument's sake right now, we're calling it a G. And then it makes a very sharp pullback. Uranium, thank you. Well, of course, I should know it's uranium because it's been mentioned to me so many times it's uranium, but I forgot. And then it goes with a double top, the V-shape. This is what I call the Groucho Marx V-shape pattern, double top, and it comes down and gaps down and makes, in fact, an island reversal right here. Look, island reversal. What happens? Think Hong Kong. You've got China here, mainland, and you've got a little Hong Kong, right, the island. And boom, comes right back to the mainland. I mentioned that because, yeah, Larry's in Hong Kong right now. But also what happened was at the Mac store last night for my wife. She wanted some things. And they had this, it must have been about 14 by 30. I'm not sure. Maybe it's about 20 by 30. This huge screen in the store, in the Apple store. And they showed as if they had a blimp or something that was just floating along at night. And they had these video shots of Hong Kong. And it was just spectacular. Just at night, it looked so beautiful. I can't remember. Larry was talking about, it had an English name, St. Elizabeth or something, mountain. I thought that was a range that I must have been looking at. It looked very beautiful. And then it went to Dubai, and Dubai is just flat, and it has these incredible buildings. But what beautiful photography or videography from the Apple products. Hey, okay, look at this. CCJ is holding the 200-period moving average, had a big move up, came back and tested it. All you can do in a case like this, because really what we're looking at is a rectangle formation, and it's stuck in the rectangle formation until it changes its stripes. And right now, all it's doing is going from the low end to the high end. I would say if you want, you can buy it at 11.23 right now. But really, I'm not even sure I'd have a stop below the day's low of 10.99. Oh, okay, maybe 1097. But really, it has to prove itself, but that's the way to think about it. My thinking is that it's going to keep testing, because unless this move by tomorrow is really strong, and in fact, by Tuesday or Wednesday of next week, it really has to take out the 1237 high to show that it's very important, this low that's being formed in this W formation. I would just say you could experiment, nibble at 1122 right now, put in a tight stop, and I think you're on the right side for the moment. Yes, even the 120-minute chart is acting quite well. And then let it move, and let it tell you whether it's going to be a longer-term play or a shorter-term play. But yes, start a position here, especially if you're of the mindset that it's been on your radar and this is kind of what you're looking at. I'm just going to take this away so you can see the island reversal better. But island reversals are usually a sign that you've got a trend change. But I've looked at these so many times. They get filled. Most of the time they get filled. This one got filled. Let me just talk about that. 1245, 1237. No, this hasn't been filled. There's still an island reversal. Anyway, that's just why I'm thinking about it. But there's no signal yet to say that it's changed its down mode. But there is a signal saying very short term we could have a rally. All right. That's that. And the next thing is, question is, and the weekly chart of the CCJ. Yeah, I've got a peak B. It's held pretty well, and it's making the arch formation. So you really want to be thinking of it. Has this a potential? And this is uranium, of course. I know nothing about uranium. All I can say is that MACD, if it deflects up again, you will see a price move. The big thing will be on the intermediate term. If it can hold above $12 for 3 out of any 3 days of any 2 days of the week, there's a real good chance it's going to go for the high of that bar. On the downside, I would say a break of this low of 1071, it's in trouble. Monthly chart is improving. All right, we've done that. Worked that one to death. Let's do this. I had another question. Let me just see. Oops, I can't see it. There was a question, MWA. Was it MW? I think it was MWA. MWA. Yeah, water products. So I've been looking at this as something that we missed a fabulous entry at one point. We had it and we got out early. I can't remember anymore. And then it was just, I was upset. I didn't get back into it because I think water products is really a big area. This is water, not just water products. This is diagnostic monetary controls. Mueller water products trading at 12.48 up 22 cents. So it's got a C, a peak C in the monthly. It's been pulling back steadily in the weekly. Daily says it's trying to turn. I'll do a little work on this when we get back. What was the other one, that fantastic water one that I used to talk about, AWK? Can't remember. It's just a symbol that's stuck in my head, AWK. Ah, American Water Works, yes.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, everyone, we're back. Dow's down 19, S&P's this is a struggle, but I think that we've kind of assessed it that it's just digesting big gains. Let's go straight to Scott in Safety Harbor, Florida. Scott, how are you?
Living a dream, Basil. That's all
Good.
I can tell you.
Good. So did
it's a dream.
You trade?
I got a pop on NVIDIA. I got everything, but I heard someone speak about CHK one day on there, and I don't know if they spoke about it. I don't know what it was. Anyway, I put it on my radar, but it keeps dropping back. But I see good things written, but I don't see. I don't know. It went to 516 today.
No,
so.
this is not a good-looking chart. There was just a fraction of a possibility of a little bounce. We were talking about it the other day, but I said I don't see much in it at all, and now I can see why I didn't, because the technicals remain very weak. And CX, which is CMAX, trading at 884 down 5 cents.
That is my ATM right there.
So I think that you've got to continue with your methodology at this point. Remember, this is the one that I said, now I'm not that sure about getting a position to hold until I can see how it can form a base of support, and then all of a sudden you're going to be looking at one of your positions.
So you don't see that base at the 880, 885, because it just seems to slam on that and just it won't go any further down.
But no, I think there's a chance that it could pull back now. If it goes under 864, I think the way it's looking right now, there's a good chance it's going to test the 846 low that was made.
Oh, so, boy, that'd be awesome.
And that's where I think you've got to. That's where your horns should be right up there, waiting for something. But what I really would suggest to you is, I'm looking at this as a monthly chart. So far, the candle's okay, but it is a peak D, and it hasn't hit the 974 level, which is the 200-period moving average. If a moment it touches that becomes a magnet, and it's going to say every time it pulls back in the monthly chart, it should keep trying to come right back and then go above 974. So I'm just going to suggest on
what
a
are you
shorter
looking at
term,
on the daily?
The daily says
today.
The daily says it should pull back, and it's probably by tomorrow going to take out the low of 877, the low of 3 days ago. And that would say, if it does that, it says watch out for that H pattern, give it a little time, a few days, and then it's going to go right into your zone where you can try to trade bounces around about 860 to 840. But right now, I'll be wrong if this breaks above 916. I think it's got a lot of resistance at the 897 to 902 level.
Let's go to another one that seems to be really popular with people right now, is this BAC. I guess they all forgot about it. It was $12 a month ago, a couple months ago. But
25.36 right now, making a double top. I'm going to suggest 2 things. One is keep it on your radar. Later on, I would say in about 2-3 weeks, I would not be surprised if this comes back and it could be one of your great trading intraday stocks. Right now, I think it's going to digest these gains.
I think you're right, and what I tell people when they ask me is I say it doubled in the last few months. Oh, yeah. I mean, sometimes it doesn't get in people's heads when they look at the chart, but
and it gapped up as well
that quickly.
Yes.
It's just, I mean, the stock small GODs don't like that. So.
Not only that, the weekly chart is just suggesting that the last move up is starting to stall, running out of energy. If there's a lower high below 25.80 on Friday and it hasn't taken it out, it says we've made at least a little bit of a top in the weekly chart. But the Fed comes out a week from today. That could be the spike that maybe Bank of America is waiting for. But I would just say give it a little time, let it pull back. It needs to digest.
I agree with you entirely about the week from now. I think there's a lot of people that's going to sit tight, but it's going to spike on that day or the day after. And then I think you're going to see a lot of profit taking after that and back to, the 21 range, 22.
Oh, I'd love to. Hey, you and me, we're looking for that 22-21 range. Love to see it.
I want the 12 again. When I was buying, do you know, Basil, when I was buying that at 12 and 12.50, 13, I couldn't get anybody interested in it, even myself. It would just sit there for day after day after day after day.
I remember you calling. Yep.
Nothing. But the interesting thing, though, all the analysts, the good ones on CNBC and some of the other the actual traders, rather, they always had a good thing to say about Bank of America, in the coming years.
Especially when they were looking at the options play, because I think the options, and that's probably something that that Kevin's spoken about during his show at noon, I'm sure. He's spoken about the options on the financials because they've been giving a lot of clues. I would not be surprised if there is some kind of a pullback here, just a digestive phase.
I'm sure you found it interesting today that even with all this WikiLeaks, with all this front page heavy news, it really doesn't do anything. I think the market is completely a standalone product now. It doesn't. I don't. I can't imagine, and I knock on wood, what it would take to push this market to make this market move anymore.
I think that if rates go higher than anticipated, if the Fed says they might speed up, I got a feeling that'll be affecting the market.
I think Greece could go completely bankrupt tomorrow, or France, or anywhere, even your country. And I don't think the American stock market would even care at this point.
Well,
a
lot of it is perception, and one of the things that's happened is that people have become a little inured to comments that are made by the president. So it's what happens and what he puts into place that's really going to affect and effect the market. And right now, I think that we're looking at is a market that says, and I said this yesterday, I think it was the day before, I think the market and the politics of the market, it's getting a little tired. People are, it's just time to re-energize, and that's, I think, what's going to happen.
Well, nothing against my fellow Americans, but there is a lot of ignorance as far as one's education, as far as things outside the U.S. People don't understand how vulnerable we really are to things that happen in other countries. The world is a very small place. And
I will talk about that at some point, not yet, but in another maybe month or two, I'll start talking about the relationship that the United States had intra-continent. In other words, they went in the 1920s. What's happening now is just so similar to what happened overseas. And even in 1987 and even in 2005, I remember people saying, hey, what happens here doesn't always have to affect overseas. Let me tell you, at this point, we are tying in with countries, business-wise, etc., just the same way. So if anything happens here, it's going to impact the world. And if anything happens outside, at least it's going to start to impact us. But at this particular
I agree entirely, and I think that we're very unique in that respect, which makes us more vulnerable. I don't think there's any one country that's involved with as many countries as we are. I mean, we're involved with probably everybody but that Korean crazy guy. I mean, we are involved with everyone, and very deeply. I mean, Brazil's going
if you
down.
Look
we
at
got
semiconductors
billions in Brazil.
Yeah, but look at semiconductors. We have to import them. I mean, it's just everything. You're absolutely right.
Everything.
So,
but people just really think that we are a standalone, and we are anything but that. Anything.
Right. But at the same time, I know all my friends keep saying, gee, what are the other countries thinking of us right now? And I keep saying, you know what? every country needs us. You can do it everywhere.
Everybody
every
needs
country
us.
needs the United States. That's the way it is. Hey, Scott, thanks for calling. Always appreciate it.
Thank you. Bye-bye.
Thank you. So we're looking, folks, at the Dow down 24. Now, I do want to mention a couple of things. I use volume in a specific way, just periodically. But I did talk about volume a little earlier. I was talking about, I can't remember exactly where it was, the Dow, that the big spike going up to the high of March the 3rd. Yep, there it is. But Tom O'Brien uses volume all the time. He's written a fantastic book. Remember the book? Hey, we'll talk about it when we get back. There's a webinar coming up. There's a...
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. I just let me do this. I want to show it right now. Here is the book. This is Tom O'Brien's Timing the Trade. Hey, he's going to be discussing details about the book. For all of you, you can ask questions. It's going to be fantastic. 18th of March, live event. Just check it out. I don't think you want to miss this. It's going to be fabulous. Okay, Vail, question. Down 32 cents, 962. I think that it's really important. Is it too late to short? Or is it a short? Yeah, I think it was a short. Now you have to wait for a bounce, but I'm suspecting that it's going to come bounce and then come back to slightly lower lows, and then it should start to move to the upside. So let me do this. If it gets, it's at 961. If it can bounce to 10, above 1023, 1015, as it arches over, not before that, but as it if it does that, as it arches over, you could short it with a move that should take out the low of 953. But I wouldn't hang on too long on any short side because that monthly chart is still pretty good. Okay, so you've missed the best opportunity, but yeah, that's the next one. Caterpillar, that's a question about CAT. Caterpillar's making that arch formation like most of these charts. Got a peak C1, C2 in the weekly chart, fabulous monthly chart. The weekly chart is a little weak. It's doing well after that scandal that it just came out. But I would avoid stocks that have a scandal, anything attached to it. When the Fed, when the government starts to look at things, they could put in one person, they could put in 100 people, they could put in 1,000, they could put in 10,000 people. We're paying for it. It's not a problem. They're going to try to dig whatever they can. So that's that. Let's see, Carterworth says relative weakness. Carterworth. I like Carterworth. I don't hear him too often, but when I do hear him, I just like the way he makes a bold statement, and it's usually pretty darn good. Peak F in the XLI, which is the S&P Industrial Spot. You see, everywhere I'm looking, I'm suggesting to you that the daily charts are saying upside is limited. Downside might be limited, but I think there's time, if not price, to the downside. Next question is Sarah. VZ. Oh, VZ. I haven't looked at VZ for a little while. Verizon looks lousy at 49.06, down 38 cents. Telephone, out of the two of them, I think is the better one. We're long. We might not be long for all that much longer, but I want to make it stop very tight. We're long at 41.52, and it's at 41.69. I'll make a decision about this. I think out of the two, this is the better looking one right now. I'm just not going to waste time if I think it's going to go much lower. The question about XOM. XOM. Yeah, I just don't see much. And CVX, which is Chevron. Okay, it was the better one. Now they're both looking lousy. What's COP? This is ConocoPhillips. They all look lousy. So this is saying to me, be careful with these for dividend stocks. In fact, right now, the dividend side is going to be a little bit under impact because we don't know just how far the Fed's going to go. Even the DOD that I've spoken about so much, thank goodness we've taken nice profits in there. We still have a core holding, and it's dropping pretty sharply. It hit 29 the other day. Now it's at 24.5, 4.5 points. That's a big percentage, right? That's when it's 10, it's almost 18% down, but it's already 60% up. So yeah, I think dividends, you've got to be a little careful right now because you don't want capital loss from trying to get your dividends. At least I don't like that. I know people have sat through things that have had 50% declines and then have come back again, and they're just happy getting the dividends. Geez, believe me, I couldn't do that. Okay, so that's that. And now what you're going to do, we're going to wrap it up. Hey, folks, check out my opening call. I think you'll find it helpful in terms of what we're looking at, why we're looking at it. All I can say is watch that VIX. If the VIX finally today can actually move from the 1138 area to the 1180s, hey, maybe even hit 12 in the next day or so, I think that'll be a sign to confirm what I'm looking at. Have a wonderful day. Stay tuned for Kevin and all the rest of the Think or Swim crowd. And then, of course, you've got Steve and you've got Dave and you've got the hosts at 3 o'clock. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.